The nice part about the 24-month bank statement is you can see the trend.
We don't have the minimum limitation. A lot of lenders, they cap you that like, we will not go less than 15%, we will not go less than 10%. The loan amounts can go up to 4 million, so which is a great amount that your borrowers can qualify. Every single person reflected on the personal bank statement must be the borrower in the file.
It is important to note that, if this was declining, right, month over month, we would have a stability concern and there might be additional requirements, or we might not be able to use the income to qualify. In this case, it was pretty consistent.
Hello, everyone. Once again, we are glad to see you here at our Simplifying Bank Statements Lending webinar. It's going to be very valuable. As you may know, the bank statement program is one of the most popular programs. And during today's session, we're going to discuss some of the highlights of this very popular program. We're going to highlight who is the bank statement borrower. We're going to talk more about the program requirements. We'll give you several tips for the successful submission. And obviously, we'll go through several loan scenarios. Just a reminder, we love questions. So please submit your questions either through chat box, or you can also find the Q&A box at the bottom of your screen. So please throw your questions there and we'll either address them on the go or once we'll finalize the formal part of our today's presentation. Just a short reminder that this session is being recorded, so no worries. If you feel like you've missed something, you'll be able to listen to this session once again because we'll provide you with the recording in 2 to 3 business days. And also we'll send you the presentation slides with all the useful links. With that, let me just remind who we are and why we are so cool. We are A&D Mortgage, nationwide mortgage lender, and we've been in the industry for 20 years now. It's our anniversary year, and we kind of started celebrating it already. Last year, we've been officially verified as #1 non-QM lender by Scotsman's Guide, and we are very proud of this title. We have more than 6,000 partner companies. And one thing to be proud of is that we recently reached 4.8 on Google. So this means our partners really trust us, and thank you for that. Thank you for your trust. We are also proud of our 24 hours turnaround times. We have a full variety of different loan programs to offer, including the bank statements as well. And as mentioned, we are operating nationwide. Also, some great thing to cover is that we are backed up by our sister company, Imperial Fund, which was founded in 2014, which means this allows A&D Mortgage to securitize loans. And here's the map. As you can see, we're definitely nationwide, so we are operating in all 50 states, but a couple of licenses are still pending. But as far as I know, we should receive those licenses fairly soon. And with no further ado, let me introduce to you our today's experts, amazing people. Nadezhda Smokvin, she is our business development team lead who will provide you with all the highlights and requirements of our bank statement programs. And Carlos Diaz, our underwriting team lead. If you have any tricky question on underwriting side, you are more than welcome to address those questions to him. And that's it for the introduction. Nadezhda, the floor is yours.
Thank you, Alena. Hello, everyone. It's really nice seeing you here. Thank you for joining the webinar. I really hope that you will learn something new on this session. A&D is the full spectrum lender. You can really fund any type of loan with us. Soon it's going to be literally any type of loan. But bank statements, it has been one of the bread and butters programs. It's been a very popular product of ours. And I would really like to dig a little bit deeper on how we work those. So the bank statement loan will be an alternative documentation for your self-employed borrowers. It's a really great product because it doesn't require you to provide the tax returns. Actually, it not just doesn't require, you shouldn't be providing them. So this is something like keep in mind that whenever you're doing bank statement, just provide bank statements without any tax information. This is a great product because it allows your borrowers who are having significant write-offs, or maybe they are having an income type that is irregular, maybe it's not clear on the tax returns, or maybe they just don't want to provide tax returns. Sometimes people are very private and they just don't want to go that route. So this is a great product for those cases. It is basically like it's more flexible. The guidelines will be way more flexible than any full doc requirements, but at the same time, your eligibility is basically the same. If we're speaking about the non-QM route, full doc or bank statement, if we're speaking about the self-employed borrower, the eligibility will go absolutely the same route. So it makes this product very effective and very good choice for the self-employed borrower to qualify for a better home, for a better loan amount, and so far so on. So why bank statement is the most popular product? First of all, again, as we mentioned, is the perfect fit for self-employed borrowers. Plus, you don't have to be actually owner of LLC, right? There are borrowers who are acting as self-employed, borrowers who are filing a Schedule C, and as long as their CPA can confirm that they're acting as self-employed, we should be able to facilitate that loan as well. Those can be truck drivers, realtors, sometimes even loan officers. So it really depends on the nature of the business. No traditional tax returns required. Again, it's not required. It must not be provided. That's something that like we have to keep in mind because we saw cases like that happening when people are providing both bank statements and tax returns, and it's not a good combination because we know that the numbers will be different. There is a way to combine both personal and business returns and bank statements, sorry. So you can go two routes. You can go either personal bank statements, you can go business bank statements, or you can combine both. You can even combine different sources of incomes. So it doesn't have to be only bank statement route. Maybe you want to commingle with something else. Maybe your borrower is also a W-2 employee elsewhere. We can combine that. Maybe they have money on the 401k account and you want to use that asset portion. We can combine that as well. So whatever works best, we can make that work. Who is your bank statement borrower? So obviously self-employed borrower and people who are acting as self-employed. So definitely don't be fixated only on people who are owners of LLC or corporation. Also be open-minded about who can be acting as self-employed. All sort of investors, cryptocurrency, like all this stuff, it all is a bank statement borrower. People who had some credit events, foreclosures in the past, this is the alternative route that they can go is the bank statement as well. So if we're speaking about the timing of that, if we're going a super prime route, which is a better eligibility, better pricing, then the bankruptcy and any other credit event should have been 48 months plus ago. If we have the opportunity to if we have the customer who had 12 months ago, or like between 12 and 48 months, in that case, we can go a prime route. Yes, eligibility is tighter, but that's an option for the borrowers who have experienced some hardship in quite recent times. Seasonal and contract workers, same here. They are great bank statement borrowers. The only thing, whenever you're having borrowers like that, when they have irregular income or it's a seasonal income, please make sure that you have addressed that beforehand, that you have specified that in the business narrative letter to eliminate all further questions from the underwriters, to make a clear picture and reduce the possible conditions or questions on that end. Okay. Here are listed some main parameters for our bank statement program. As I mentioned before, we have two options. It's super prime and prime. So prime is going to be your borrowers who have credit score, who have no recent credit events, who have a better mortgage history. So in that case, 620 FICO score is the requirement to move forward with the file. For the prime, we're allowing no score borrowers as well. So if you have a borrower who has 0 FICO score reported on their credit report, in that case, we must go prime route, even if all other parameters are super prime eligibility. We can go up to 90% CLTV on the bank statement loan, including condos. I know that a lot of times condos is something that is being asked the most in terms of CLTV, so 90% requirement falls under those as well. We are allowing blending personal and business bank statements. If you're blending, for example, several personal bank statements, we're looking at them as personal bank statements. If you're combining personal and business bank statements, then your personal automatically become as business bank statements. So we're reviewing them on the business guidelines and eligibility. So please be aware of that and address those like expense ratios and everything to have the according numbers. The loan amounts can go up to 4 million, so which is a great amount that your borrowers can qualify. If we have a CLTV under 55% and we are having a cash out transaction, your cash in hand has no limits. So again, if you have someone with the high equity, with the expensive property, they can really get some money out of it without limitations. When it comes to the calculation of the bank statements, we are providing a service. It's called Concierge service. So you can access it when you are submitting a file. So you don't have to actually submit it, but you have to import your 3.4 in our portal. And once you upload the documents, the bank statement documents, it's going to give you the option to request the service, and within 24 hours our team will provide you with a calculation that you can use for your file. It doesn't obligate you to move forward with the bank statement program. So if something is off, if something was discovered that you don't want to go forward with the bank statement and you would want to go some other direction, you can go other direction. So at this stage, don't be worried about providing bank statements. It's not Carlos, it's not underwriter who is like looking at these bank statements. It's a different team who is just pre-qualifying your income, basically. This is free. This is something that you can use at the started file, so you don't have to wait for the file to be ready to be submitted. Just start the file, just have the complete information about your borrower, about the company that you are qualifying for, and upload the bank statements. Make sure that all bank statements are consecutive, that it's 12 or 24. Don't provide any extras, don't provide any last bank statements, and make sure that those are the last available bank statements. When it comes to reserves, we have limitations on the reserves based on loan amounts. So the minimum will be 3, the max will be 12 months reserves. So how it works, if your loan amount is under 1 million, then it's 3 months of reserves of PITAA. If it's between 1 and 2 million, then it's 6 months reserves, and everything that is higher than 2 million requires 12 months of reserves. Gift funds are allowed for reserves. So if you are short on reserves, please make sure that you explore that option as well, because we should be able to use that as well. When it comes to the mortgage history, it specifies how many lates you can have for super prime and prime. As you see, that prime is way more flexible because it restricts you only for the 60 days late on the last 12 months basis. When it comes to the super prime, you shouldn't be having anything within last year on the 30 days late, and no 90 days late within 24 months. Again, if anything is outside of the guidelines and at the same time it's something that still your file is pretty strong, your borrower is strong, like just something happened, let's explore with your account executive what can be done, how we can maybe qualify for an exception. So this is something that you have to be working with your AE hand in hand and figure out what's going to be the better route. For the bank statement, we're also allowing the temporary rate buy-downs. So you have the 3-2-1 and 2-1 options. Again, market is shifting. Sellers are more interested in contributing. Make sure that you are exploring this option because it actually helps your borrowers to have way less monthly payments for the first few years. So really something to dig in. Okay, so when it comes to the property types, bank statement basically allows almost every property type A&D works with. So the only things that are not included in the bank statement, but A&D does work with them on some other products, it's going to be manufactured in multifamily. The rest, your single family pods, townhomes, condos, condotels, 2 to 4 units, everything is available on the bank statement program. You can qualify with a short-term rental as well. So definitely explore those options. And if anything is, again, outside of the guidelines, maybe some multiple ADUs, maybe some rural properties that are not SFR, like maybe you have a manufacturer's rural, definitely reach out to your account executive and explore your options outside of the guidelines, because we did approve those. They're have like more limitations if the exception is being applied, but we had a good success rate on those, so make sure that you are exploring those as well. Okay, so 12 and 24 months personal bank statement requirements. So we will now discuss a little bit of the differences between approaches when it comes to personal bank statement and business bank statement. So personal bank statement route allows you guys basically to use all 100% of eligible deposits. So everything that was business related, if you're going with a personal bank statement, we will use all the numbers for the income purposes. We will just average it between 12 or 24 months, depending which route you went. And that's it. And depending on what's your proportion of the ownership of the company, we will use that number. We can accept bank statements from credit unions, from banks, thrifts. So you like normally we never had an issue of not accepting a certain bank statement because predominantly like it's something that can be verified. Sometimes might need an exception, but it's very, very rarely. And only deposits from business activities will be considered. So if anything is not business related, we have to exclude it from calculation. So please make sure that you are reviewing them thoroughly when you are pre-qualifying them, because anything that like is like, let's say your company is a restaurant, but they also have a property that they are renting out and they are receiving that rental income, that's not really a business related income, even though that is something that comes to that account. We have to be careful in determination which numbers we should be able to use. When it's a business bank statement, it's a little different because we have to expense your business bank statements. Defaulted ratio will be 50%. However, it doesn't mean that every single file has to go with a 50% expense ratio. So if you have a different number, request the CPA letter that will confirm which number is in the actual expense ratio. The good thing about A&D is that we don't have the minimum limitation. A lot of lenders, they cap you that like, we will not go less than 15%, we will not go less than 10%. We don't have that within our guidelines. I mean, obviously we have a common sense and it has to meet some industry standards and it's underwriting discretion and all this stuff, but we don't have the minimum, and we saw approved loans with low expense ratios as long as it does make sense. So the CPA letter will do it. Whatever the CPA letter basically says, we will be able to apply that expense ratio. We have very thoroughly described CPA letter requirements in our guidelines. So whenever you have that, just right away apply those requirements to request it from CPA. So they provide all the information needed for the review. But again, it's a very easy process. We can use up to 2 bank accounts per business. So and we can use up to, no, sorry. So when it's a personal bank statement, we don't have any limitations on how many accounts we can use. When it's a business, we can use up to 2 business accounts per business. And if you're combining personal and business, the same way. So you will have 1 personal and 1 business because your personal basically equals business in this case. And the qualifying income will be based upon concierge calculation, or based on if you didn't request the concierge calculation, you can do it yourself. We have the spreadsheet provided on our website under documents and forms. So if you feel that you want to calculate it yourself, please do that. But we will need that calculation along with the bank statement when we are submitting the file. Can we do the next one? Okay. So business ownership requirements. This is going to be applicable for both personal and business since it's still a self-employed borrower. So as always in mortgage industry, 25% will be the list ownership requirement. So anything that will be under 25%, we will not be able to qualify them for the bank statement loan. The good thing is that, like, normally we're asking for 2 years history of the business existence. So that's the mortgage standard. That's been like that everywhere. But when it comes to non-QM alternative documentation, there is some flexibility to it. So if your borrower has had an experience of being a self-employed and has this company in existence for more than 12 months, but less than 24 months, we still can consider it as long as they have had an experience in the same industry with the same type of position. That's kind of an important caveat. So they have to have the same type of position to qualify with this business. So let's say you have the borrower who used to be the manager of the restaurant in the past, but now they have opened their own restaurant and it has been in existence, let's say, for 14 months. That is something that would be applicable to move forward with the bank statement program, even though their business hasn't been in existence for 24 months. But if in the same case, let's say they have been a server in the restaurant and now they have opened the restaurant, that is something that is already going to be questionable because it's not the same level of position. It's not the manager and the owner, it's the server and the owner. I hope that does make sense. Okay, and let's talk about the tips for success, for successful submission, and obviously for successful closing. Review your borrower's deposits. So it's not only deposits. Review your borrower's documentation. Really review your bank statements. Don't rely on the just luck. Don't rely only on concierge service who will calculate your bank statements. Glance through the documents that are provided by your borrower to you. Because a lot of times some information can be missed by you and the loan might not go smoothly or might be even denied if something is off. And it's a good time to do that, to review that before submission when you can choose some other route and go another direction. So my advice to you would be review it yourself and also prior submission, talk to your account executive. Discuss with them all the things that concern you, everything that you saw that might be a struggle there, and have them also to take a look at your bank statement prior to submission. What is important when we are reviewing the bank statements, especially like on our level, when we are not really underwriting them, but we are just taking a look at some possible red flags? It's going to be obviously the non-sufficient funds, all the overdrafts and the SAFs, the negative balances. So those going to be a very important parts to take a look at your bank statements. Obviously, your deposits. So to make sure that all deposits are understandable, that all deposits that you are using are business related, that large deposits that you see that they have some explanation, some receipts, something to back it up to be able to use it moving forward. And if you cannot use it moving forward, you should be aware of that and take it in consideration when you are calculating what's your average income. And I would also say that take a look at your withdrawals as well. Like, as a lot of times people are paying attention to borrowers' deposits and completely forget about what's going on withdrawal side. Sometimes withdrawals can be important part. Sometimes something can pop up that you want to address with your borrower beforehand. Sometimes maybe there are some even liabilities. Sometimes might be happening over and over again on your bank account, like on a monthly basis, and we might need to add it as your liability. So make sure that that is all addressed, because again, if something is not good, if something is not that you want to move forward with, you can downgrade the program beforehand. You can go the CPA route, you can go DSCR if it's investment property. So there are ways to avoid it if we address it timely. Understand the nature of the business and understand how the business is generating income, because a lot of times like in underwriting process there will be some back and forth, there will be some questions. So your knowledge about the nature of the business, your knowledge about what's going on with your with the business structure of the borrower will eliminate that time of like, oh, let me call the borrower to ask this, let me get this information. So if you know what's going on with your borrower's case, it's going to be easy to fix some concerns that might occur. But also, this is something that we need to address up front. We have the business narrative letter. A little bit later, I will show you how to find it. So this is going to be something that will be required at the submission process of every bank statement loan. And there you can describe the business structure, how they're operating, how they're generating income. So this will eliminate a lot of possible questions moving forward from the underwriting and will limit your conditions as well. Because a lot of times what we see is the conditions on just nature of the business and what is this deposit, what is that deposit, and so far, so on. 12 or 24 months bank statement. Also use this approach wisely to understand which is the best route for you. If your 24 months bank statement don't look as great as 12 months, go 12 months route. It's really, I believe it's a quarter difference. The LTV is the same. Your pricing will be just a little bit worse in 24 months, but at the same time, you will have a better qualification in terms of like you don't have any red flags, you don't have anything to explain. So make sure that you reviewed both options and picked wisely of what is your best option. Another thing that recently became a concern, and I would really want to cover it as an additional tip, is making sure that your trend is either stable or increasing. So every time when you're having declining income, because even like if let's say we're taking a 24 months bank statement and maybe first year and second year, the income is inclining. But if we see that the income month to month is declining, that's going to be an issue as well. So make sure that you're addressing that as well, that you are not looking at it only as the yearly pattern, but that you're looking at also as month to month what's going on, because income has to be either stable or increasing. And if for any reason happened that you have a situation currently that your income is declining, make sure that you reviewed whatever bank statement were not provided yet, because at submission, while file goes, there are maybe 30 days additional came, like maybe you have additional bank statement that were not reviewed yet. Make sure that you looked at those as well. Maybe you will be able to clear the pattern by providing additional bank statements. Because we see a lot of those recently, so I had to cover that part. Another tip will be use the concierge service. Don't waste your time on calculating every single piece of information. Just submit it to concierge service and save your time on better things. And the very important tip that is highlighted here is number 5. It's related to the personal bank statements. On the personal bank statement, every single person reflected on the personal bank statement must be the borrower in the file. So this is something that must not be missed, because a lot of times what we see, it can be spouses who are sharing one account and they're trying to submit the file only on their husband, let's say, and that's not going to be an option when it's personal bank statement used where husband and wife are reflected on the bank statements. So in that case, we'll have to add both, or again, get an exception, which is not that easy to get. And the best route is always to avoid exceptions. So make sure that you address that part and explore if the husband or wife can be added and what are your options. Okay, so this is our technology that can support you with your submissions and with your experience with A&D mortgage, not only with bank statements, but here specifically with bank statement. So again, we have recently, in the last year, we have updated our portal. It's our aim. It's a great portal that combines every single thing in one, so you don't have to anymore to go from one spot to another, one portal, one website. You can find every single information that you need for the file flow within the portal. Concierge service, that's your service that calculates the bank statement for you, so you'll be able to apply it for that through AIM, through the portal, whenever you are uploading the file. Also on this slide, we see the covered self-disclosure part. This is a great tool for you, first of all, to take control of the process when you can self-disclose all the fees as needed. Plus, you are saving time. If, for example, you know that your contingencies are expiring and you need to move file forward quickly, that's a great tool to self-disclose quickly, have them sign, and the file flows to underwriting right away. And also you're earning money with that. You're earning loyalty points by self-disclosing file. So every self-disclosed file that has been funded, you will receive additional 300 loyalty points that you will be able to redeem moving forward for different perks for reducing closing costs, basically, for your borrowers. Income calculator, that's not bank statement related, but it's also going to be applicable for your other loans. So every single W-2 borrower, self-employed with tax returns, income calculator will allow you to calculate those numbers within like 2 to 3 hours. You will get back the spreadsheet with the calculations and then decide if you want to go with the full doc or you want to convert it into the bank statement and file the concierge. You can even do it simultaneously, to be honest. Like, again, it's not the underwriting, so it's not like that underwriter will not unsee whatever they saw. This is something that is just pre-qualification. You can explore your options and then decide which route to go. Okay. Loan assistance. We have the quick pricer. I will share it with you shortly. But we also have a great tool, the scenario submission. You can access it from AIM as well. So let's say you are on the go and you want to explore some scenario solution and you don't have time currently to reach out to your account executive, or maybe you don't know who's your account executive. Maybe you just joined the company and you haven't met them yet. So this is the great quick way to get some clarification on your scenario. Within 30 minutes, we are promising to reach back to you. So you're just filing this form, and within 30 minutes, your assigned account executive will give you a call and will explain you how to work it out. Or will email you. You can like write your requests on how you want to be communicated when you are filing this form. The guideline assistance, we have the AI tool that you can ask for certain topics, certain questions when it comes to the guidelines, and you can get the answer there. So that's another quick way to get the solution. And life partner support. Life partner support is our one of the greatest tools that we have been offering for years. This is our support that backs us up on the technological level and not only. So whenever you cannot reach your account executive, or maybe it's after hours because this support is working way past normal working hours. I believe it's till 1 a.m. Eastern time. So in that case, like let's say in the midnight, you decided to submit the file and something doesn't work, you need some question to be resolved. That's the great way to access our support. And let me get back to the quick pricer.
Yeah, Nadezhda, I just was about to say, would you like to share how this amazing tool works in real life? So maybe you can share some example how we can price one of the bank statement loans. So take over the screen.
Okay. Absolutely, I will. I think it's a must know about this particular tool that we have. It's probably one of the best tools because first of all, you don't have to have the access to the portal. So if you, for whatever reason, didn't have yet credentials with us, it's not a problem. You just go on our website. So it's on our website at any page on the top menu, we have the quick pricer and it's gonna open this page. You can price here any type of loan. It doesn't have to be only non-QM. You can price here governmental loans. You can price here conventional loans. In our case, it's a non-QM. So we're selecting non-QM. We're making sure that our all parameters have been applied correctly. If it's a citizen, we are making sure that it's citizen. If it's a non-permanent resident, we're making sure that we're changing it because it's all gonna adjust your pricing accordingly. If it's a bank statement, we're making sure that we're specifying which bank statements we're using. What's the occupancy? What's the purpose? You can play around with your numbers on FICO, CLTV, loan amount, not only by scrolling it, you can just type it in, right? You don't have to scroll to find the exact number. you're specifying all the parameters. If you know that your state has some additional restrictions, maybe on the prepayment penalty, maybe some additional adjustment are coming with the state, make sure that you're applying also the state. I mean, Florida doesn't really have anything going on. It's a great state in that case, but sometimes it might affect your eligibility. So make sure that you're applying that as well. You can price it with borrower paid compensation. You can price it with the LPC and change the amount here. You're specifying what's your mortgage history, what's the DTI numbers, what is the property type, how many units, and so far so on. It's going to give you the pricing. That is also something that you can play with. Depending on what is important to you, is it the rate, is it the monthly payment, is it the closing cost? So in that case, you can play around with numbers that are important to you to get it to the number that you need to see. If let's say you know that they cannot qualify for anything above 3,000, you're playing around and seeing how low can you get to that number. If that's not an option, you're restructuring the loan, making the loan amount lower, and so far so on. You can also share it with your peers. So by sharing it here, it's going to generate the PDF with the snapshot of the pricing, and you can share it with your processor. You can even share it with your borrower. However, it's going to have the A&D header on it. It's going to have the A&D sign. So if you want to share it with your borrower with your name, you have to work it. Like you will not be able to share it from the website without A&D name on it. Okay. Something that hasn't been mentioned before, we kind of covered bank statements as like traditional first lien. We also offer bank statement on the second lien position. We will not go too much in the details right now, but if that's something that you guys are interested in, you can just go into non-QM second lien. The same thing, apply bank statement and explore what are your options and pricing for the second lien position on this program. Okay. And one more thing, since we are sharing my screen right now, and this is something that is a new requirement. If you have been working with us, maybe you haven't experienced that yet, the business narrative letter. So every time when you are submitting the alternative documentation for the self-employed borrowers, so it's going to be bank statement, P&L, 1099. So in those cases, we need to provide also the business narrative letter to explain how business is working, how income is generated, when it was open, and so far so on. So you can find it easily on our website under loan tools, documents and forms, loan level forms, and it's going to be right here. The good thing is that this letter can be filed basically by anyone. It can be your borrower, it can be you as their loan officer, it can be the CPA if you wish so. So really you don't have to make it complicated for your borrower. You can do it yourself as long as you know the information about your borrower's business. The more detailed is the information, especially when your borrower's business is not that easy to understand how it functions, the easier will be the file flow, the easier will be to use the certain transactions that we could have been not using because we didn't have explanation on those, and might be able to use it without any questions if you will address those here and explain like how they actually perform their business. Okay. Carlos, do you have anything to add? Because I a little bit touched also the underwriting part.
Thank
No,
you,
you did a great.
Nadezhda.
You did a great job. We can go to the scenarios now.
Yeah, it's time. It's time to go to the scenarios part. So let's share a couple of them, and Carlos will give us some information on that part. Go
Thank
ahead,
you. Yeah.
Carlos.
And I do want to stress that that business narrative form is going to save you guys a lot of trouble. A lot of it is context, right? When the underwriting team hops into a file, as long as we have the information in front of us, just telling us the story of the business, it does away with a lot of uncertainty and conditions that might come if we need to reach back out for clarification. So it's definitely a useful tool for us in underwriting and for you guys to not have to go back and forth between the borrower. So this is our first loan scenario, pretty common. It was a real estate agent. FICO 706, LTV 75%, trying to do a cash out of an investment property. We didn't see a ton of deposits every single month. They just deposited their commission in a large lump sum over the course of the year, right? So it was just one large payment each month. They didn't have any mortgage rates, anything like that. So we were able to review the 12-month bank statements, made sure that there were no negative balances, checks bouncing, things like that. So another example of wanting to just double check your transactions prior to submission. And we take the full average. It is important to note that if this was declining, right, month over month, we would have a stability concern, and there might be additional requirements, or we might not be able to use the income to qualify. In this case, it was pretty consistent. Via the nature of the business, there are going to be some months that are up and down, but across the board, we were able to make sense of it and qualify accordingly. The key thing there again is to note that the deposits were spread evenly throughout the year. There weren't large 4-month gaps of no earnings, which would be concerning. That's something we're keeping an eye out for. And then, again, we're also making sure there's no significant decline in earnings. In this case, we actually had a situation where they changed accounts. So sometimes that happens, right? Maybe they had to close something with Chase due to some kind of like fraudulent transactions, or maybe they just went to Wells Fargo because they had better rates or perks or whatever. If you run into that kind of situation, we do allow it. What we do require, though, is to see the first account, the one that's being closed, go down to a zero balance. So just provide the months that you do have, and then you provide the new months for the new account. So it should start at $0, and then we'll just kind of combine them together. And again, that business narrative form would be an example of something that can tie that all together without having to go back to the borrower or a phone call.
Carlos, great note on changing bank accounts. It's not a common situation, but it's good to know we can also work with that as well. Can we move forward to the next scenario?
Absolutely.
Okay. Here we go.
All right. So the second scenario, landscaping business. So this was more of a Schedule C borrower. They did obviously landscaping, summer work. And then they also supplemented that with snow removal. So in the winter. In this case, FICO was 670, 80% LTV. They were trying to first-time home buyer buy a home, right? So in this case, they went for the 24-month bank statement, no mortgage rates, anything like that. Overall, a good credit profile. The deposits were occurring on a weekly basis throughout the year. So even though the deposits were coming from different sources, right? So in the summer, they might be coming from personal checks. There might be invoices from other kinds of landscaping businesses. And then in the winter, you could kind of link them to the snow removal. That's okay, right? That's all the same business. The nature of the business makes sense. There's going to be a little bit of variation as far as what the revenue is from month to month. Maybe they're busier in the summer, but they do supplement it with that snow removal in the winter. The nice part about the 24-month bank statement is you can see the trend as a whole, right, on a bigger scale. The 12 months are great. Sometimes the 24 months, though, can paint a bigger picture. And in this case, we could clearly see, hey, yes, there's a tiny dip in the winter. It does bounce back when they are busier in the springtime and the summer. And we were able to help this borrower get their first home. So that's always a nice feeling. That again, circle back. The business narrative is huge on this one. If we don't have that information up front, we might have to reach out to you guys and ask, hey, what's going on with this slight dip? But in this case, it was a non-issue. And yeah, it's a nice, easy, clean file.
Thank you, Carlos, so much. I see one question we just received specifically about the second scenario. Since the nature of the second business is different, how is the income calculated?
Since the nature of the second business, so do you mean between the spring and summer landscaping and then the winter snow removal?
I think this is what Anil is referring to. Yes. Mm-hmm.
Okay. So this borrower in particular was a Schedule C, and we were comfortable with using that just over the full 24-month period as one single business. It kind of mimics actually Fannie Mae's guidance for a seasonal borrower, where you're allowed to use that other season's work or even unemployment, frankly, to help supplement that income as long as they have a 2-year history. So when we convert that to non-QM, without tax returns, things like that, you would just be treating that as one large business. And, in addition to that Schedule C borrower, we are getting that CPA letter to confirm any kind of business continuity issues that we run into. But in this case, we were good to go.
Thank you, Carlos. Thank you, Anil. Great question. Honestly, I don't see any additional questions in our Q&A box. I hope that's because we covered pretty much everything. But again, just as a reminder, if you have any scenarios you'd like to discuss, please reach out to your account executive. If you just starting or not yet started working with us, as Nadezhda mentioned, you can always submit your scenario through the form on our website, and we'll be ready and happy to help you with that. Okay, so just several announcements of the upcoming sessions. Actually, this Thursday, we're going to do our next AIM Partner Portal workshop. Nadezhda talked a lot today about our amazing portal. So if you'd like to discover more information on how to submit the loan through our portal, please join us and we'll walk you through this experience from A to Z. Also, we mentioned our loyalty program, and we're doing another workshop on this next Tuesday. So during this workshop, you'll know how to actually earn your points by closing loans, and by the way, using the self-disclosure feature, and most importantly, how to spend those loyalty points and some cool features. And also next week, we do collaborate with a lot of industry experts and great speakers. So we're inviting Steve Richman once again. He was speaking at one of the sessions last year, and it was a huge success. So we decided to invite him once again, and he basically will be talking about how to promote yourself, how to make yourself stand out on the competition. So please join us, and you can find all these webinars on our website, and please go ahead and register. And again, if you're not yet partnering with us, would be more than happy to see you among our partners. So please go ahead, scan this code, and join us. With that, I wanted to thank you once again for joining today's session. I really hope it was very informative and useful. Once we'll finalize this webinar, you'll be forwarded to the survey page. It's going to require just 30 seconds of your time, but your feedback is really valuable to us. So please let us know how we did. And we hope to see you on our next sessions. Have a good day, everyone. And thank you, Nadezhda. Thank you, Carlos.
Thank you, everyone.
Thanks. Bye.
Bye.